Good morning, traders. Chris Bess here with Traders Profit Compass with another edition of Before the Bell for Tuesday, October 18th, 6:59 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Taking a quick look at futures, got another nice pop working in the pre-market. Equities up about 1.4 to 1.7%. If we take a look ahead to macro today, we've got industrial production. That's always an important number in my book. We've got a housing market index release at 10 a.m. And then Raphael Bostic of the FOMC is talking at 2 p.m. I wanted to also make you aware that Mike Wilson of Morgan Stanley, who has been bearish the whole way, was out with a note either Friday or Monday, I'm not sure which, going tactically bullish into Q4. Somewhat noteworthy. I think he's looking for 8 to 10% pop. I don't have a link handy. If I can find that, I will certainly pass that along. But you can look for Mike Wilson at Morgan Stanley on Twitter or even possibly the Morgan Stanley website. I'm sure his note is floating around out there somewhere. You can take a look at that. I thought that was noteworthy. Very reasonable guy. He's been right on the money. One thing I like about him, he's willing to go out of consensus versus these, perma bulls or perma bears. Of all the guys out there, making calls, he seems to be right more often than he's wrong. So I thought that was noteworthy. Over on the earnings front this morning, we've got Goldman, Johnson & Johnson, Lockheed Martin, and then after the bell, Netflix, United Airlines, Intuitive Surgical, J.B. Hunt and Trucking, and Interactive Brokers. I think of course, Netflix will be an important bellwether for tech. We've had some other airlines already out. So United will probably be in line. But J.B. Hunt and Trucking, I think, is one of the first to report in that sector. And Interactive Brokers is always a good read on that particular market segment. So let's dive into our charts. U.S. dollar has just more or less been consolidating. I think as long as it stays above trend, that uptrend lines are there for a reason. As long as it stays above, the dollar's going to be in an uptrend. TLT remains solidly in a downtrend. I've got this nice downtrend line. You can see we're slipping lower and lower. Maybe I can let me see if I can update you on the weekly. I have not looked at this. We're right here at this 98, this first level of support below this big trading range. And then we get, if it comes to pass, I would just, from a technical standpoint, probably expect some little bounce here just to relieve some of the oversold conditions. You can see up here on RSI, pretty oversold, and momentum down here in the weeds. But then, if rates continue to rise, that opens up a big leg down towards 84, and that was the measured move target on the weekly. So keep TLT in your crosshairs. VIX was down yesterday, down 2%, but still above our support zone between 29 and 30. And the title of today's video is finding the signal within the noise. And when you've got volatility this high, I mean, you can expect, 2-3% daily moves just out of pure volatility. It's not necessarily, when you're trying to find, oh my God, we're in an uptrend, or oh my God, the world's ending. A lot of what you're seeing is just pure volatility. So be careful about drawing big major conclusions about this move and that move. There was a funny little tweet that I saw. What was it about? Man, you guys out there that sold into the close on Wednesday and got long, and then bought the big spike and then closed it at the top, and then you got the big rug pull on Friday, and then you covered those, and then you went long on Monday. You guys are just like absolutely amazing. A tongue-in-cheek kind of a post, like getting these moves is very, very difficult, and the people that are out there saying they did all that are probably just lying. So be careful about those big conclusions. Bitcoin just down here oscillating. The volatility, and it's really interesting that as we've seen major volatility in equities, the volatility has really come out of Bitcoin. And whenever there's a volatility squeeze, that means it's setting up for a volatility expansion. The problem is you don't know which way that expansion is going to go. So just if you're into trading those, just have your levels alarmed and be ready to go on a thrust higher or a breakdown lower. Oil is we broke out of the daily downtrend. We had a reach up, and now we've had like a 50% pullback. The thing I'm concerned about here is price below all the moving averages. It's really got to hold right in here, or else you're coming back into 82 and a half type levels. So be careful there. Gold has not done anything. We went to the bottom of the channel, we went to the top of the channel, and now we're down here towards the midpoint of the channel. If you want to get some more resolution on that, pull up a 60-minute chart, and you can you'll see that there's a little bullish falling wedge happening there that might be tradable, but in general, it's been a trade that has found it tough to really get going. I thought we were going to get a chance for a breakout here, but of course, resistance is resistance until it's broken, and it was obviously rejected there. If we go to our oscillators, on the way back up, right here in the midpoint of the range, not particularly helpful. Same thing with McClellan on the NASDAQ, heading higher. And of course, if today's rally holds, this will progress towards the top. And if if Mike Wilson's right, if we get a run into OPEX, we have October options expiration on Friday. We get a strong run into that OPEX, we could find ourselves, tactically overbought up here towards the end of the week. If we move into SPY, you'll see that, here was the big Thursday, open poorly, big rally. Friday, they pulled it back. Yesterday, they ramped it up, but still below the daily downtrend. I think what would be significant on this chart is a breakout above 370, and then that would break us out of the downtrend line and then open up for a possible run up to this 38% retracement level at, let's call it 379. Then we've got the falling 50-day, and then we've got our 50% retracement up here in this resistance zone between 385 and 390. So those would be some upside targets that I would look for on a breakout above 370. And if we go down to our 60-minute chart, you'll see that lines up really well with the 60-minute downtrend line. So if we break out above 370, you'll see that we've got a little gap to fill up to 372.50. And then what I want you to notice is that for the most part, we are, if we break out of a channel, one of the things you want to check is how wide is that channel. So here we've got a low, let's call it 352, and the top of that channel at the same spot is 372. So we've got a $20 wide channel is what I'm reaching for. And if you've got a $20 wide channel and you break out above the channel at 370, then your measured move target is approximately $20. And then that would bring us up into that 390 range, which lines up really well with this 50% fib retracement and this resistance zone on the daily chart. So those line up really, really well. If we move on to the QQQ, one thing I've been saying in the trading room is, until this thing gets above 270, it's really nothing. And the reason I say that is because you've got this low here that came down to 370 back in June, the June low. It, for all intents and purposes, held as support here in early October. We got a pop up and then we fell right back down, undercut it, and now we were rejected at that level on Friday. We were rejected at that level on, Thursday rejected, Friday rejected, and then yesterday could not get above. Now, we're above that pre-market, so that will be an excellent, excellent pivot for you on the long side should we get above 270. And what I would say is, as long as QQQ is above 270, right here at the pivot, and SPY is above 370, then you've got dual levels to reference each other on the long side. And so I think as long as, if we break above and then we come back for a back touch somehow of 270, I would be a buyer there. And then I think you can tactically be long against 270 on your QQQ type trades. And so here on the 1 hour chart, I've got yesterday's gap up penciled in, and you can see we're right here at this 270 level. And notice that we've got a high volume over price bar here, right at the gap at 276. And then I think then the objective would be to fill that gap. You can see that there was a line of support and resistance right there at 280, and then your next level above that is 285. IWM has been relatively stronger than SPY and QQQ. Why? Because the June lows held. You can see June low, a bunch of tests here. We tested that on Friday. We broke out, and now we're holding above. So I think here on IWM, it's funny how all this worked out, but 170 is your key pivot to hold. So 370 on SPY, 270 on the Qs, and 170 on IWM, I think, are the key pivots. And you can see here that if you were to lose 170, then you're kind of back in the weeds with this big $3 gap lower. We don't want to go in there. And then the next level to break out is 173, and then 175.50 will be an important line because of these highs. Breakout there, and then 179 at this high volume over price bar here, and all this resistance would be, your upside objective on IWM. As we go into Meta, all these, if the pre-market holds, all these are going to open above the levels that I've got, but they will still serve as good pivot points for you today and going forward if their rally does emerge and stick. Really interesting spot for Meta. Why? Because we had this $8 trading range. We dropped below. We got the measured move, basing action, broke above this 131 at the midpoint, and now we're up at resistance at 134. And then from our work that a break above back into an old trading range, your target is the width of the range. So back up to the top. So a break above 134, first target's the midpoint at 138, and then top of the box at 142. And if that were to occur, then we will have broken the 60-minute downtrend channel. Now, what I will caution you about is, if we get that push, notice that 138 could pose some significant resistance, because you're not only at the midpoint, but you're at the top of the downtrend channel. So price will, of course, know that, and I wouldn't get too antsy or frustrated if price hesitates right here. And if you had gotten long yesterday, or at any point along the way, what you could do is, if you got a fast move up to 138, you could book some profits and then wait for price to prove it, right? So if you're optimistic and looking for more, if you look around the board and Apple's making progress, and Microsoft and the Qs and all that, all the stars are aligning, when you get your breakout above 138, then you can reinitiate your long and look for 142 and higher. So those are some ideas on Meta. Same kind of idea here. We've got a trading range between 138 and 142.50 on Apple, as it's kind of been basing in this area. And if we were to, so we've got a range here of about $4.50. So 4.5 onto 142.5 gets us up to fill this gap and make a run for the top of the downtrend channel. And then there will be an important spot, because you can see that right above we've got a lot of unfinished business in the form of these gaps. So if you get a breakout above 146, I would definitely be long. If you wanted to, you could wait for 147 an entry into this gap here for a fill and potential run up to this high volume over price bar at around 152.50, 153. And if you had gotten long yesterday or any time before, and you get that fast move up to 146, 146.50, I would handle it exactly the same way as we just discussed on Meta. Book some of your profits, wait for price to prove it, wait for it to break out. You can either take the breakout at right above the downtrend line, wherever that may come in, and then hope for a gap fill, or you can say, okay, well, we broke above that, but I will take it long at the gap at 147. So that's strictly up to you. Tesla looks a little bit different than our other charts, because we've yet to get that breakout, and you can see we've got a very clear line of resistance here, and I'm going to call it between 220 and 225. All these rejections. Had another rejection the other day. We came up yesterday, spent a lot of time trying to get through 220, couldn't do it. What I would do here is, and this is just for me, alarm 225. Can you take it long on a breakout above 220? Yeah, you could, but you possibly also be faced with a lot of frustration at 225, just because we spent the better part of 2 days not being able to get through that level. So I think patience could be rewarded there, waiting for it to break out 225, and then you got some running room. You can see that things kind of open up to 235. You've got a void in the profile here. There'll be some sticking points around 240, but then you got your $15 to the good if you can get that breakout at 225 and then get a lift, hopefully pushed along by the overall market. Moving on to Microsoft. I've been saying in the trading room, 235 was a key level, just for exactly the same reason we've talked about on Meta and some of these other names. You had a well-defined trading range back here between 235 and 242.50. We had a big gap up yesterday morning, and then it just really consolidated within a narrow range. But now, from a technical standpoint, because we broke back into the old range, our target is up at the gap at 242, and then we've got a $5 gap above. So depending on how this thing opens, you've got a key level at 242, and you've got gaps on either side. You've got key support at 235, and this morning, or at any time, in the future, near future, if you got a pullback into 235, that's a very objective long, and then you can set your stop just below. And if everything falls apart, then you're looking for a gap fill down to 227.50, and then that's your that would be a nice move in itself, more or less $7. So this is going to break one way or another here as we're in the middle. Amazon, I think it's pretty clear on the chart that 115 is the major pivot. You've got the midpoint of this $6 wide trading range with a line of rejections across the top here at 115. I would be long above 115, and then you're looking for a $3 move to the gap, and then a $2 move to the gap fill up at 120, 121, and then it may get a little bit tougher there. You've got some trading action back here, and you've got one of the larger volume over price bars, but then you've got a gap to fill up here up to 126, and then that'll be a really, really big level. But if you got long somewhere around 115 and you got that push, getting to 126 would be a huge win. Google really just been carving up this $3 range, and we're going to open up higher today, probably into this gap. Given the price action, I would be looking at either 101.50 or 103, because if you go back, you could easily block in this whole area as a trading range. You can see 103s up here, got rejected at 103 there. So if we did it that way, 103 to 97 is a $6 range. And then if you broke above 103, you'd be looking for 109 at the bottom of this gap here, looking for a fill. And you can see that above 103, see how the value area is well defined from here, 103, down to 97. Once you break above 103, then the profile opens up, and then you could realistically look for a push up towards 106, 109 on that kind of a trade. So depending on how much you want to really front run it and where it opens this morning would kind of dictate how you might want to trade that one. Now, Netflix had a spectacular day yesterday, up 6.5%. One thing I want you to notice here is, we closed weak on Friday, and then the gap up yesterday. But notice where the gap went to. We've been saying all along that 234 has been the major pivot on this whole chart. It's either been above or below. If you were on your toes yesterday and realized that on the open you opened above the major pivot, that was a major signal to be long, not only against the opening gap, but also above the major pivot. So if you got that or anything close to that, well done. You nice job on that trade. So now we are back up at this big $100 gap. I think 245 is your pivot, and then the prior high in this gap was around 151. Now don't forget, we've got earnings after the bell, so there's a good chance for a rally. The market looks strong in the pre-market. You might get a runner in Netflix ahead of earnings, but then on earnings, total flip of the coin. My personal style or preference is to be a spectator on earnings, and whether you decided to hold your position or or not, and you did get a runner today, I would certainly be going to the bank before that earnings event, and probably just to make the potential for losses reduced. If you think it's going higher, just get something kind of far out of the money, because as we know, when the earnings hit, the IV, the implied volatility, will come out of your options, and that's the setup where you're right, it goes higher, but then you lose money because all the implied volatility drops out of it, and the value of those options is greatly reduced. Semis really did not participate like the rest of the market. Really weak price action. I think there's probably, yes, you can alarm 180. Definitely have an alarm at 185. I think that's your big pivot, because then it would be re-entering this $10 range. But it's obviously been slow going in semis here lately. ARC-F had some nice horsepower yesterday, up 7%. Now we are the bottom of the box. Had a brief undercut and then jumped back above. You can be long against 15 on ARC-F. And if everything holds true to form and there's a rally in QQQ, you're probably going to get the horsepower in your ARC names. And since we're inside the box at the low end, you've got a very well-defined, you can put a stop, right below 15, and then just stay long against it and see if you don't get a run, at least back up to the midpoint at 1675, or even a run to the top of the box at 1875. ARCG made a positive move, but didn't quite have the horsepower of the ARC-F. But you're right here at 3150. I think you can be long against that level and see if you don't get up here to the bottom of the box at around 34. You've certainly got places where you can set a stop, whether it's at 31 or 3050 at these lows. Is pretty well defined right there. I think your main pivot remains 3150. Same idea here on ARC-K. It was up 7% as well. We had this well-defined line from the May and June lows at 36, and we are above. So that's a positive. From the bearish point of view, we still haven't broken the uptrend line. But I think here, if you want to be involved in ARC, you take it, if you didn't take it yesterday, you take it here and you set your stop right below 36, because those were the prior lows, and then you're hoping and praying for a breakout above the downtrend line, which would open up a move to 40. Doesn't seem like much, but that's 10, 12% from present levels. And then ARC-W got the 7% move, but you can see here we're still below the box and in a weaker technical posture than the other ones, because we have yet to recapture the May and June lows here at 46. So personal preference, but you're still below the major pivot, which I consider to be 46. And if you were to break above that, then you certainly have a long looking for the next levels higher, breaking back into the box. I think your big sticking point above here will be in that 49 area, because you can see there were prior lows, and that's where the value area really comes into play inside that box. So those are the levels there, 46 and more or less 48.50, 49 here at these prior lows for a more confirmed long, and then that would get you above this downtrend line as well. So just as a recap, we've got October OPEX on Friday. Options expiration week is usually bullish. Remember, we're at elevated VIX above 30. You're going to get a lot of intraday volatility. Just expect that volatility and don't read a whole lot into it. I think this is where your levels and your trend lines become all important, because those are objective, tangible things that you can look at intraday to make rational decisions and follow our technical tenets. If you're recapturing levels from below, that's bullish. If you're losing levels from above, that's bearish. And respect your stops. And keep in mind the main pivots that I've laid out, because if this, as long as price stays either above or below those main pivots, those should be your more major decision points. Going back to SPY at 370 or above is bullish. QQQs at 270 or above is bullish. And IWM at 170 or higher is bullish. And if you're looking across your matrix, whatever you may be trading, and you get that triple confirmation, okay, SPY's above its main pivot, same with the Qs, same with IWM, then you've got some very objective waypoints to shoot against on the long side. And then from there, it's all about, do we get follow through to the upside? And think very, very tactically. With VIX above 30, I still think this is a very tactical environment, not an environment to deploy all your ammo into big swing longs. Yeah, take some shots, that's fine, but just remember, in a high volatility, you want to see, or at least I want to see, for big trend line breaks in the VIX, get VIX down below 30, below 29, and then we could be set up for a nice Q4 rally that Mike Wilson is calling for. So we don't have to take his word for it. We can wait to see those objective levels of VIX cracking and all our stocks that we trade above their major pivots. That will give us a lot of confidence to be a little bit more aggressive on longer term swing trades when all those things align. So I hope the information was helpful. Hope you guys have a good day of trading. If you're new here and you appreciate technical analysis, having a game plan in the morning of how to trade these and other stocks, hit the subscribe button, the alarm bell. You'll be notified of my YouTube content. And then also over in the show notes, join the rest of our team. Find the link Takes 15 seconds to find the link to the blog site, drop in your email address, and then you'll get midday observations. You'll get everything that I do right in your email box, plus an invite to the trading room. It'd be great to have you. So let's wrap it up there. Hope you guys have a good day of trading, and talk to you next time.